gentlemen, and welcome to the year-end results for Exxaro for the financial year ending 31st of December 2013. Just a few announcements before I carry on with the announcements, with the greetings. I think from a safety perspective, in the event of any fire, and we hope that we don't get one, please exit with your nearest door is actually the one behind you to your right, my left. And then in terms of hygiene, ablution facilities, out this door, just before the exit on the right-hand side for both ladies and gentlemen. Let me make sure that I'm not missing my notes here. And I think it's important that obviously after the presentation, we'd like to invite you for a lunch, and I'll remind you again towards the end. We'll also be having a session with the media, which will be held on these premises, but in a separate room, a boardroom just outside here. You would have seen the signs. There's a passage just behind this building which will direct you to the media. And there'll be a lunch served through those doors. I believe there was a previous function here where it wasn't announced that there's a lunch and everybody left, and there was a lot of food left. So we don't want that to happen. And then I should also extend a word of welcome. I think we have some special guests here, in addition to the management team from Exxaro, but also we're happy to have the support of our board members, and I think also the support of the shareholders of BE Holdco. So without mentioning each one of you, I'd like to extend a very warm welcome and thank you very much for the support. We also have with us those who have dialed in through teleconference, webcast, and Twitter as well. So maybe then just to kick off with just an overview, I think from my point of view, and I think with my first interim presentation, I gave the headline that the results were hesitantly positive, and I haven't heard the last of that. But given where we are at the end of the year, I think the theme in our view, and this we've agreed with the CEO, that it's certainly been a challenging year on most fronts. But I think it's also fair to say that I think as Exxaro we've made progress. A wise man once said there are three certainties in life: death, taxes, and progress. And I think progress is what I'd prefer to focus on, because I think in spite of these challenges that we faced during 2013, Exxaro has made progress on a number of fronts. And just on a high level, I think four that I can mention. The first one being that I think we've succeeded in progressively making the working environment a much safer working environment. And in the mining industry, that continues to be a key theme, and particularly in light of the gruesome accident that took place in the gold mining industry. And so that's an achievement that we're quite proud of. Secondly, I think we're seeing some signs of recovery in the coal business from a production perspective. So internally, in terms of capability, the strategies that were decided on a couple of years ago, those are now beginning to pay. And consequently, I think, a respectable growth in the income back to shareholders of an increase of about 10%. And I think we were able to achieve that without any major capital write-offs, which I think is also a significant for Exxaro. Thirdly, and equally important, is the fact that we're making significant progress in terms of engagement with our stakeholders across a broad spectrum, from customers such as Eskom, TFR, internally to employees. And what that is doing for Exxaro is creating an enabling environment. And I think in these tough times, what we've realized is that, it is through stakeholder engagement that we're able to have an enabling environment. And obviously the price helps. Exchange rate has certainly come to the party, but that's another factor. And then lastly, I think from a strategy perspective, we continue to refine our strategic statement of intent, and more importantly, developing a business philosophy which will guide us in our role, not just as a business, but in our role as a business within the society that we find ourselves in, both in South Africa and the African continent. So those are just some of the highlights from a progress perspective. And I think it's real progress, and in all measures certainly beats any potential for death of the business. And I should probably also add that it makes paying taxes an unavoidable eventuality. So I'd now like to firstly ask Sipho to come and share with us the story of Exxaro's progress, and then later on Vim will elaborate with some hard numbers. Thank you.
Thank you, sir. Thanks, Mzila. Morning, ladies and gentlemen. It's always an honor standing in front of you and talking to you about results, whether they are exciting insofar as the way you look at them or not, but that's very important. Mzila mentioned a couple of people who are with us, but I just want to recognize our Synergy guys who are here, particularly the guys from Tata who are with us today, because they are following the results as well very closely. Of course, Tronox, we have them amongst us, but as per protocol, I advise them to keep quiet today. They are not going to say anything. This is our show. It's not their show. They had theirs, so yeah. And I also want to say that, you know what, we've always had the chairman of the retirees, because I've been now warned to change the name from pensioners to retirees club. And Con has always been the president of that one. So he got fired because he crossed the line. So he's no longer part of that. He's now part of the board. And we have amongst us Humphrey, who now is an acting, because we've learned that people must act. He's now acting. So Con is deposed, Humphrey is acting. So, and the other thing that I want to say is, Mzila told me that we are on a generator now. So you must understand that. And when I listened to Etzinger this morning, he was talking about wet coal. Now, the good thing is that, unlike in the past where they said Exxaro delivered wet coal to them, it's not the case. So we can't be blamed for that. But yes, I think we're having challenges, as it were, in the country, rolling blackouts. But you can't attribute that one to Exxaro at all. I just want to make sure that we get that one clear. So yesterday, all of us who follow cricket were on tenterhooks towards the end, because it was a very incredible day. And here is one team who shall remain nameless, trying to survive. And here's another one trying to win. But they are all competing in one space. One is trying to survive, and one is trying to win. I just want to tell you one thing, that this industry, as Mzila has pointed out, we've had a very challenging year. We've had a very challenging year this year, and not only as coal producers, but as the industry in general. But the truth of the matter is, we chose not to survive. Not that survival, like the guys in the end who lost out. But we also want to win under these conditions. And therefore, people may look at us and say, you're taking crazy decisions under these difficult conditions. But at the end of the day, we have to look after your money, and therefore we've got to win so that you win as well. So that is very, very critical. So we're not going to be on the survival mode all the time. It's good to be more defensive when it comes. Maybe before them and I continue to talk about these results, let me just probably highlight a few things that happened last year. We had an industrial strike, the industrial action, first quarter of last year. It lasted for 3 weeks. We lost tonnage as a result of that. That rattled our coal business. But of course, you also know that the global market was not very favorable to all of us. But we survived. And therefore, unlike the guys who were just standing there defending their wicket, we try to do more than that. And you will hear about that as we proceed. If you look at the coal prices, for instance, coal prices at some point in 1912 were $94 a ton. And the average for the year was $82 a ton. So the prices, we had some issues with that. Iron ore prices, at some point in February, the iron ore prices were $160 a ton. And they went all the way down to $110 a ton. And that's a challenging environment. And of course, you can go on and look at pigment prices, and Trevor can give us more color into that. But the volumes were still there, and the same thing with zircon. So it's been a very, very challenging environment. And the temptation would be, let us be more defensive all the time and stop playing. It is important that even under those conditions, we continue playing. We also had challenges with regards to the political terrain. As I said, there was lots of industrial action, and it continues to this day. Someone asked me a question, are we going to have a strike this year? I don't know. I really don't. But these things do happen. Of course, there were statements made on coal being declared a strategic asset. That sort of rattled all of us. And as we continued, we had to deal with quite a lot of issues on nationalism, and all of them impacted on the business. So the management team, I think you must understand the context under which we had to operate. It was a very tough environment because of all those things. And I honestly want to take my hat off to our management team for having done what they had to do to deal with the situation. If we go to the first slide, therefore, in spite of all the things that happened, we were very lucky and we did well. So you don't put everything on luck, but you work harder so that luck also supports what you're doing. On the safety side, I must announce that in the life and in the history of Exxaro, for the first time, we finished a year without any fatality. And that, I think, is quite remarkable, that everyone went home safe to their own families. But I must just also say that this is not only on Exxaro side. I mean, if you go back probably 10 years, or not probably 20 years, the industry in general, if you look at all other sectors of the industry, the numbers were around 500 people dying in our mines in South Africa a year. But this year, for the first time, we dipped below 100. We are around 93, 94. So it's a remarkable achievement for South Africa. And I can tell you now that on the coal side, we compare with anything, in fact, better than anything around the world. So we are starting to set up benchmarks now as South Africa. And we're going to see, with new technologies being introduced in the hard rock mining side, on the hard rock mining side, we're going to see quite a lot of those improvements on the side. So it's quite remarkable. So on the safety side, I think we've done well, as you can see. Lost time injury frequency radio. What radio? Lost time injury frequency rate. I said radio. You must. I'm sorry, you guys didn't catch it. We did well. Improvement of 34%, and of course the same thing on the revenue side. The same thing on the coal core. I know, there's always issues about whether you guys are managing your business very well. Well, if we could give you 3 billion rands, I think, of NOP, I think that's not a bad number. Yes, it's going to get better at some point. Your HEPS, I think we've done well, and particularly if you were to strip out what the likes of Tronox that we had last year, it's even much better than that. And based on all that, the board got so excited that they decided to declare a very good dividend, which you see today, and Vim is going to talk about that. So I think it's a good story that we're telling you. But just to run quickly on the issues of strategy before I allow Vim, some of the things that happened on the strategy side is that we sold Zinco last year. We stopped a number of projects that were burning a lot of money, but which were necessary as we tried to win as the organization, because we look forward all the time in terms of where things are. Things like Botswana gas, gravelite magnetite, we had to deal with that. And of course, in the end, we looked at NCC, and we disposed of that. And we continue looking at our portfolio in that instance. Now, if you look at responsibility and accountability, as I said, I've spoken extensively about our safety, and it's quite remarkable that we had 6 business units which were LTI free, and those were reductants, nucleoside, NCC, Zinco, R&D, Ferrol and Denacor. All of them did well. But there's something that also happened, and that I must report, that in spite of 3 Section 54s that we received, and 6 Section 55s that we received, we still did well in our coal business. On the health side, we continue looking after our own people. And on the HIV side, it's quite pleasing to note that a lot of our people now have enrolled on this HIV/AIDS program that we've got, and quite a lot of them are, and some of them are on the antiretroviral program. So I think we're doing very well. We have, because we've noticed that wetlands, insofar as the coal business are concerned, are very critical. We have gone all the way to now do a study on all those, and we've taken an inventory on that. So it's very important that we deal with those issues going forward, because at every step of the way, we need to ensure that we act responsibly and build a business along those lines. On climate change, I think we've done well as well. Exxaro was one of the 11 companies that qualified for inclusion on the JSC's 100 Climate Disclosure Leadership Index. Now, turning to leadership and people. People are critical in any organization. Without us developing people, I don't think we will survive. On the transformation side, I think we're there. I mean, this is the very important year insofar as the mining charter is concerned, because it's 10 years of review. And as Exxaro, I think we've done superbly. I think one area where we still have to focus on this year and get all our numbers right would be on the disabilities, people with disabilities. I think we're battling slightly with that. Not because we're failing, but you know, one interesting thing is that sometimes people don't want to be declared as one of those with disabilities. I mean, one gentleman was telling me in another company that they work with a guy, and he said, "Yeah, I'm on a wheelchair, but what do you want from me? Do you want my legs or do you want my brain?" And he said, "Well, we need your brain, so am I disabled in my brain?" And I think it's the challenge that as South Africans we need to deal with going forward, because it's important whether we need to classify people along those lines. On training, we continue spending money and training young people. The numbers are there in front of you, so I'm not going to go into that. On youth development, we spend quite a bit on that. And on Empower, as we declare dividends, you will know that a total of 16 million will be going to the employees, which means out of the 7,240 employees, each employee will probably receive about 2,200 windfall on that one, which is really great. On portfolio improvement, what we did last year, we continued developing the GMAP, and I'm happy to say that we are 97% complete by December, and we continue to perfect everything there. Our GG backfill phase 1 completed during the second half of 2013, and of course, as I mentioned, the NCC disposal has happened. We also, which is important, received environmental authorization on Belfast and last year, and also our mining right was executed in October 2013. And this project is very important because as we dispose of some of the assets that we've got on our portfolio, it is important that we bring in new ones as replacements, and this is what we're dealing with insofar as that one is concerned. But we'll talk more broadly about that. So on the other one, we're going to talk about portfolio improvement. As I said, we continue focusing our strategy on SIOC, development of Mayoko. We spend quite a bit on that one, and we will talk about that. But if I speak about Mayoko, you'll see what we have done. And we made an announcement of this year that we have signed the mining convention. All pieces of documents will be finalized by the end of March. Therein, we will start doing more work in terms of, so that we are able to give you more information on that. And why is this important? It's important because you must understand, in August last year, we took a decision to delay everything because we wanted to get into a position where we are. So even the studies, even the numbers that we could have finalized, we did not finalize everything. So from now onwards, once we sign the convention, we are going to be able to do all those things. So please wait and be patient. And I know that you start getting notes saying, we're not getting enough on Mayoko, we're not getting enough on Mayoko. The only thing that we're trying to do is to ensure that we don't waste your money or we don't deploy capital when it is not necessary. It is important that we do that when the time is right, when we've got everything ready. So we have to make sure that. But Wim is going to add quite a lot on that. Just one thing that probably concerns other people is that the mining right at Mayoko is for 25 years. And of course, it's the same as in South Africa. In South Africa, the MPRDA talks of 30 years. So, it's because you renew these things every time. So it's not different to that one. I think it's important that we talk about that. Then on energy, you are aware that we spoke about Synergy and financial close. And that has happened this year, and the guys are starting with the construction of the two projects that are there. In Waterberg, we signed with GDF Suez to supply the IPP that we've been working on for many, many years, and that will happen in due course. We also spent about $20 million on coal gasification, and because that was very important that we do that one. That's the partnership we have with Link Energy. So it's critical that we consider that one. And the last one that I just want to talk to is portfolio improvement. We continue spending quite a bit of time on a lot of things, and we'll talk towards the end about the titanium dioxide business. We've completed Zinco sale. Our investment, of course, at Black Mountain still stands, awaiting further developments there. And, of course, the exiting of Chifeng in China still stands for 2016. So, because, we can't just go out. There are certain rules that we need to follow until we get to that level. On the cost side, our programs that we've got in Exxaro, starting with CI continuing up until now, that project is working very well. And Wim will confirm to you that we are making great strides in managing our costs going forward. So it's important that we deal with that one. And then we will continue with this project going forward. But then the number that you see there, 157 million, that we took out on corporate costs, I think it's quite remarkable. And it doesn't happen at once, but it's going to continue. It's a program that continues. And now I've said my bit, and I would like to invite Wim to come and give us more detail on financial as well as operational performance.
Thanks, Mzila. Thanks, Sipho. Good morning to everyone that I haven't met earlier this morning. I'm indeed proud to present to you the results for 2013. Over the next few slides, I will take you through the detail of yet another stable performance by our coal operations, despite the 19 days of industrial action that we had. An increase of 49% in our net operating profit, and that you will see is very close to the record in 2011. The latest development with our two major projects being GMEP and Mayoko, and then another stable contribution from our equity investments, predominantly SIOC and Turnox, which led in the end to a modest 4% increase in our headline earnings per share to 14.63 rand. Also, as Sipho said, a very pleasing 10% increase in our divvy for the year, up to 5.50 rand. And then, very important to us, a continued strong balance sheet that will give us sufficient firepower to fund our robust, but you will see today, very focused project pipeline. So I think the combination of all these results, all these elements, again delivered a very solid and a welcomed financial result. And I think our thanks must go out to our employees, and I see a lot of our mine managers here today, which is fantastic. Those are really the guys that make the safety performance and the operational performance and the financial performance for our business. So thanks, guys, for all your hard work. But also our business partners, and there are quite a few old faces of the business partners that we had in our business, and you all contributed to the detail. So the next slide is again just our IFRS numbers. Let me remind you that it's not comparable to 2 years because included in 2012, we had still Rospina for nearly 6 months and, of course, the mineral sands business. So we're not going to go through that detail. I would like, however, to go to the next slide, which is the summary of some of the important one-liners events that we had during the year. Firstly, let's start with NCC. You recall that we impaired the asset first half, and subsequently we sold the asset, and the net effect is that we had to impair the asset with 143 million for that period. Another big event, you'll see it under 2 lines. On the Zinco side, as a result of the previous impairment and as a result of the sale of Zinco now, we reversed about 98 million of previous impairments. But the one that I think most of you missed when we had our original results set out is the close to 1 billion profit that we've made with the sale of Zinco, and that is predominantly as a result of us also selling our environmental liabilities through that process. And you'll also pick up 181 million there, third from the bottom. This is just all the post-tax equity accounting impacts of our businesses in Tronox and SIOC and Synergy. So if you then take and you subtract this non-core events from the IFRS numbers, I would like to move to page 17, which is basically the essence of what we're going to discuss today. There are a few messages that I want to give you guys here. On the headline earnings contribution, let me just remind you the difference between HEPS and core is basically just as a result of the prior year adjustments that we spoke about earlier. So the first message of importance is, and let's just work on core because I will focus the rest of my presentation on core, the bottom one. Coal, close to 40% of our headline earnings per share during the year. Ferrous, great, 78%. We all know about the losses of TiO2 during that period. And then the second important message that I want you guys to concentrate on is on financial year 2012. Right at the bottom, you'll see last year we had R1.67 cents of loss in our other businesses. That equates to 591 million rand. It's a significant decrease of that cost, more close to 500 million. And you get that 32 cents for this year. That only equates to 112 million rand of loss in the rest of our businesses that's not attributable to either coal, ferrous, or TiO2. And the three main elements included in that number. It's projects to the amount of 87 million rand. Then the net of our investments, Synergy and base metals, that was a net loss of 13 million rand for the period. And then the last element, we only have 12 million rand of net corporate cost left in that block. On slide 28, I will share detail with you on the movement on the specific line under other. So, if we move to our coal business, the gist of what we manage. I think there are some other next slides. I will again share with you the main drivers. Obviously volumes, the prices, our cost trends, and of course the impact of Medupi. So let's move to the volumes. Overall coal production was down 1.2 million tonnes for the year. You may recall that we lost about 2 million tonnes in the first half as a result of the industrial strike. We have made up close to 1 million tonnes of that at Grootegeluk as we ramp up the Medupi plant. And therefore, the loss in production was predominantly, unfortunately, in our tied operations, where we were close to just over 1 million tonnes down. I think we've given you all the detail of the small ups and downs in the commentary, so I'm not going to share with you that. You can just read through the commentary. But there is one item that I would like to highlight, and that is what happened at Semi-Coke. Previously, we spoke about our char plant. We've now rebranded to Semi-Coke. Production was 48,000 tons higher this year, mainly as a result of new markets that was developed in 2013, and that was to counter the depressed downturn in the ferrochrome industry of 2012. So on the market side, you'll find coal sales slightly down on the 2012 numbers, predominantly as a result of the higher buy-ins that countered the effect of the lower coal from our own production. On thermal coal, the one-liner would be in line with production at higher prices. On our met coal, a very similar performance to 2012. And then the good story on our exports, as Sipho said, that increased by close to 15% over the period. And that's predominantly as a result of the changes that TFR affected to the Groote Geluk line over the last quarter of last year. Again, as Sipho said, it was quite a challenging environment. We started the year off with prices on $92. By mid-year, that decreased to $72, and it stabilized more or less at $85 by year end. So during this period, we have realized the $82 per ton, and that was 13% down on the 2012 numbers of $94. Let's turn to the next slide, and we'll have a bit of a look into our own murky crystal ball of the future. And I'll try to share with you the trends. If you look at the graph top left, you'll find most agencies predict a very sideways type of trend of coal prices over the next few years, in dollar terms, that is. Our prices in the local market will again follow the international trends, and Eskom, as in the past, will correlate with PPI going forward. And our volumes should be as stable as it was in the past. So on the bottom left, you will see that although the export prices in dollar terms decreased substantially over the last few years, if you put that in rand terms, the green bar, you will see that there has been it's a total different picture, and we do expect that trend to continue in 2014 as well. Some new slides that we've included here, or some new graphs that we've included, has to do with the performance at Groote Geluk and the way that we look at that going forward. Now, you know that we've always been restricted on our exports from Groote Geluk, predominantly as a result of the unavailability of trains and or Transnet's performance. But then you will see that we have received, on average, for the last quarter of 2013, about 2 trains per week more than in the past. So if Transnet can sustain this performance, and we are very confident that it is indeed possible, we will get probably around 4 trains per week, and that will increase Groote Geluk's capacity by 600,000 tons, basically doubling their capacity to export going forward. And as a result of this past performance, and as a result of what Mkhulisi is discussing with the teams, we feel comfortable to, for the first time, lift our forecast. You remember that we always gave guidance of 4 million tons, and therefore we are confident that to give you guys guidance that we probably will see a number of higher than 4.5 million tons in 2014. I think on the next slide, I've addressed most of the trends, but I do owe you the detailed numbers in the top right-hand side. This is where we take the profit from the 1.9 billion to the 2.9 billion for this period. If we look at the first column, prices, I think in general we discussed that. Lower exports, predominantly offset by higher Eskom prices. On the volume side, you will see that positive bar as a result of the additional coal coming from our commercial operations, predominantly the GMEP tons. On exchange, we have realized an average of 9.48 rand for the period. That was 17% higher than the 8.08 rand in 2012. Inflation, we worked on an average of 5.9% for the period. diesel a bit higher at 11%, labor at 9%, and energy was at 7%. Then you now know about the 1.2 billion. There's the first warning. That's Eskom, exactly as I spoke about Eskom. So that is the Eskom payment. We planned this one, I promise you. So this is the number of 1.2, again, is just the difference between last year and this year. The actual number, as you know, is 1.6 billion that we received from Eskom, and a differential of 1.2 for the two periods. And then the column cost, the last column. This is predominantly as a result of higher costs from the group being allocated to the coal business as they used more and more of the services. So let me move to our next slide, which is Medupi. You see where we were at 1st of December, 97% complete. We still plan to deliver the project within the 10.2 billion, which I think for a project of this size to being delivered on time and within the budget is a fantastic performance by the group. Well done to all. We are, of course, today ready to deliver the coal to Eskom or to Medupi. As you know, they are not ready to take it, and as a result of the full stockpiles that we have on Exxaro's site, we have very limited production from this specific facility today. You may recall in August last year that we shared with you that we will have the first takeoff of coal from November last year. As you now know, it didn't materialize, and the latest information that Khulisi and his team have is that we will only start to deliver the first coal as of April this year. So until further notice, I can only share with you the following assumptions that we have used for this year. We will definitely, again, still receive the shortfall payment of 1.5 billion for this year. Secondly, we have planned to deliver 6 million tons under that November scenario. We now know it will not happen, and hopefully within the next month or so, we will be able to give you that number. And we will continue to capitalize all the costs associated with the ramp-up of GMEP until June this year. So then we await the outcome of the negotiations. I think it is as important to Eskom as it is to us to come to an amicable solution. We've always come to one in the past, and they've always honored the agreements that they had with us in place. So as Exxaro, we feel comfortable that within the next month or two, we will be able to share with you guys the detail. One of the other big projects was, of course, the backfill project, and it has been delivered and ready for commissioning. And then I need to give you some feedback of our very focused coal capital looking ahead for the next few years. You will see we've included 3 major projects. So on the expansion side, you see that we've got Belfast in there at an amount of more or less 3 billion rand. Thabametsi Phase 1 at 1.2 billion. And then the 2 retorts at Coke, 300 million. And then we still have to spend on various phases of GMEP around another 1 billion rand. So that's the bulk that we have under those 2014, 15, and 16 for expansion capital. If we look at sustaining capex, 2 elements in there. Firstly, our replacement mine at Leeuwpan, what we call OI. We've got about 1 billion between 2015 and 16 to spend on that mine. And then, as we gave you guidance in the past, we have to spend about 1.5 billion per year on a huge replacement program at Groote Geluk. That will continue until 2016, whereafter we will drop down to around 1 billion rand of sustaining capex for the group going forward. Needless to say, ladies and gents, you've heard about this for the last few years. Unfortunately, it is in the domain of us receiving the necessary regulatory approvals. We are indeed very encouraged by the 300 days being announced by government, and the timeline of this is obviously subject to us receiving all our water use licenses and mineral rights. Mayoko. So Sipho discussed with you the progress on the mining convention. The total cost for 2013, we spent about 1.6 billion rand on the project, predominantly on long lead items such as locos, wagons, and some of our plant and equipment, as well as on drilling programs and some project costs. And that brought the entire spend up to today to 2 billion rand. I think Sipho mentioned it, but let me make it clear again, that no further funds have been allocated to this project until, one, we receive all the definitive agreements, and we hope to get that in place in the next month. And two, our board then has the opportunity to evaluate the final agreements, the impact on the project, and what it will do to our balance sheet going forward. And therefore, on slide 38, you will see that we haven't included any numbers under capital just because we don't have those numbers available and ready for you today. We will, however, spend some money during this year, and I want to share that with you. We will spend about $10 million on the pre-feasibility study to complete the pre-feasibility study for the new stage approach. And we have a $2 million per month for the operational costs in Mayoko, in the country, and that is to have our footprint in the ROC, to maintain our footprint in the ROC, do some more work there. And then project cost in the range of 3 to 5 million rand, and that's basically to continue to confirm the resource and expand the resource. So if you add this up, you will find that currently the plan is to spend somewhere between 500 million and 700 million during this year on all these elements. If we go to the rest of our ferrous business, SIOC, again, a strong performance, and needless to say that it is a major contributor towards Exxaro at about 80%. The strong performance was mainly, as you now know, as a result of the increase in the export iron ore prices, the weaker rand, and then, of course, partly offset by the lower production. Norm is here. I think he shared that with you in detail. I think it's also appropriate on behalf of this shareholder, Norm, to thank you guys for an excellent job. We know it was a very difficult year, but you guys have succeeded on all fronts. And we're very happy to take the 28% increase in our equity contribution to 4.1 billion. And we're even more than happy to take the 25% increase in the divvy, which now accumulates to a 3.5 billion for this period. Again, a star performance in our portfolio. Then Trevor and Adrian, we get to the TiO2 side. So the detail behind the numbers there on the top left, I think Tom shared with you last week on the call. Needless to say that the impact of the lower mineral sands prices and the lower prices and volumes on the pigment side impacted negatively on these results. The information there on the top left is, of course, in US GAAP. And we've had various requests to put that into IFRS numbers, which we have done so for you on slide 42. Now, there's a key to understand that, and I will give it to you now. The key to understand slide 42 is 083-609 Abby. So please call Abby. Please don't call me with that detailed explanation. I beg of you. It is very detailed, and I think I understand that, and then the next day I don't anymore. So hopefully that's what you guys have been looking for. We've also included the production numbers that you asked for, and thanks to Tronox to make it available to us. So we have the South African mineral sands business because, as you know, we have about 60% in that business, and that is quite substantial for you to understand. I think there are a few important messages that I want to highlight. 4 messages. Firstly, yes, we took a hit of 780 million rand, our share of the equity loss. And I'm the bottom right graph now, table now. Then we had to add back 938 million rand of all the PPA accounting adjustments. So effectively, if it wasn't for that financial PPA adjustment, the group per se still contributed 158 million our share positively over this period. And then you can see the two big numbers. The mineral sands business over 1 billion. And then, of course, we know about the problems in the Tronox, the rest of the business, the pigment industry. And you can see that they basically nearly took away all the profit that we made on the sand side. So that's the story of Tronox this year. If you understand the contribution being positive, you will understand that this business still make positive cash, and hence the continued dividend declaration of the group that we received over 500 million rand of dividend, although in theory the business made a loss over this period. If we then go to our other investments, so previously we announced the appointment of Lebanex to sell the remaining consumables and scrap on our behalf at Zinco, and the aim was to eventually give them ownership of that operation. The transaction was concluded in December last year, and we received cash of 183 million rand. That led to the accounting profit of 964 million that was reversed because, in essence, we have sold all the environmental liabilities with the asset. This was a sale of shares, so it was immediately effective, and I think it brings to an end the Zinco chapter in our history. The only last item that I would like to highlight is on Black Mountain. It is a contribution of 80 million. It is 21% down on the previous year, predominantly as a result of prices. A very busy slide, but one that you guys that go through our results in detail love. Let me just highlight some elements. When I use the first 7.5 billion bar, and I compare that to the 3.5 billion in the end, that is basically a summary of slide 14. If I then take the middle, the 2.9 billion, which we compare to the 2.6 billion, that detail comes from slide 16. And then I have already discussed with you guys in detail Mkhulisi's coal line, which is the difference of 1.9 to 2.9. So I've dealt with all the detail on the slide except two elements. And that is the under costs, the 128 million decrease or increase in costs at Ferrous. Two elements there. We allocated 81 million rand more of corporate costs to the Ferrous business as the Ferrous business started up. And also as a result of the alloy stream refurbishment, there was another 27 million included. Then you will find that at group, we had a saving of 437 million for this period. Threefold. One, as I said, we allocated additional 200 million to the coal business for costs. We allocated the 81 million additional to the Ferrous business. And then the 157 million saving that Sipho spoke about. It's something that we said to you as shareholders and general public that is something that we drive every day. And I think it's been a great performance to have 157 million permanently of our cost structure going forward. If we turn our attention to attributable earnings, again, I have now shared with you all the detail except the net financing cost, which is really in line with our debt. Synergy, you find a higher loss from Synergy for this period. The reason for that is they had financial close of two major projects, and that brought some costs to the income statement for that period. And then on tax line, again, ladies and gents, please work on 28% as your rate for the year. The number that you see there is only 9.7, but it is distorted by the two normal elements. Firstly, the disposal of investments that added 7.8 percentage points, or 7.8%, and then the equity incomes, which was close to 15%, 14.9% over this period. My favorite slide, my favorite topic. Cash, not debt, but cash. if we look at the movement during the period, we started off the year at 2.2 debt. We ended the year at 3.3. The main reason for the increase was as a result of the money that we spent at GMEP. The way we like to look at this is our dividend received, the 3.2 billion. Again, this was sufficient to pay our own dividends, to pay our taxes, to pay our net financing costs, and to pay our sustaining capex, which was 1.2 billion. Cash remains one of the most important pillars on which we build Exxaro and make sure that we have the ability to continue under any circumstances, whether it's the good years or the bad years. So if we look at our capital funding structure, you'll recall that we had 8 billion facility in place, 5-year revolving credit and 8-year term loan. You can see that we have now drawn about 3.6 billion, predominantly, as I said, to fund Medupi. And that still gives us a headroom of about 4.4 billion. So as part of the optimization of our balance sheet and to preserve the maximum flexibility, we are currently exploring a number of options to potentially increase the diversity and diversify the sources of our funding, and we will keep you posted in this regard. You'll see that we end the year off at a very strong 10% debt to equity, and with the current forecast that we have, we probably will end the year at more or less the same amount. So we don't foresee a significant increase. Sounds to me as if the sound is down. Is it back? Down, okay. It brings me, that's a sign, it brings me to the last slide. Get the sign, thank you very much. Signal, I mean. So again, the board carefully considered our outlook for this year, our capital commitments, which is much less than in the past, our past practices of dividends, and of course our growth, our focused growth aspirations, before we declared a very healthy dividend of 3.15 rand, at a 2.4 cover for the period, which brought our total divvy for the year at 550 cents at a 2.63 cover. Up to today, since inception, we have now paid out 5.7 billion to our BEE partners on dividends and 82 million to our employees who participate in the Empower share. Ladies and gentlemen, from my side, thank you very much. Thanks to our auditors, internal and external auditors. We're all here today for hard work. Thanks to my colleagues. As I said, it's great to see our mine managers here. Thanks for the board members who attend. We have a very strong board, and that's evident in the way that we manage our business and the way we look at our business going forward. And then on behalf of the executive SIPO, thank you very much for being the leader, the visionary leader that you are, taking us on these difficult roads. It's easy to do it with the leadership of SIPO and the support of our colleagues. And then in the last place, thanks to my own team under 086, 082, 609, Abby and the rest of the team. It's a fantastic performance. They make it easy for us to stand here and share with you all this detail. So I'll hand over to SIPO. Thank you.
And Mzila. You know, it's always a pleasure working with Vim. He's a very conservative guy. He doesn't accept anything that you say quite easily. But I think you need that person under these conditions. You need a very tough person. But he's also pragmatic because when you put him in a corner, you don't have to drink a Jägermeister with him as before he accepts what you're saying. But he is very reasonable in terms of. So thanks, Vim, and thanks, Mzila, for your contribution as well as the team as well. Just looking ahead, we still say the same thing. We think 2014 is going to be a very challenging year. Why? Because even though we're seeing some improvement in the European market. That's the Europe is the economy in Europe is showing some signs of improvement. The U.S. is doing okay. It's getting better. Countries like China continue to be stable and are growing at various levels. It still says to us that it's still a challenging year. So we will continue wanting or planning to win as a company. I think that's very, very important. But we've got to be very prudent when we deal with that. If I focus on the South African environment, I think politically this is an interesting year because we have elections. And there are lots of statements that get made in the process. And being seasoned business people, we sift through that and we think we see what we have to see. Like, for instance, there will always be discussions about coal being a strategic asset, platinum being a strategic asset. I think it's important that those things are said. But what I can show you with is that behind the scenes, we work very hard with the government in trying to deal with those issues so that it doesn't rattle or impact or affect the market negatively. So there's lots of work that is going on that front. The MPRDA, as you know, it's in front of Parliament. And the reason why we're still debating it is because government have accepted the fact that there's contribution that can come from the Chamber of Mines and other institutions. So we are in a conversation with them as well. I think the question of licenses is a big issue, as Verm has mentioned. In one of the conferences, Mick Davis 2 years ago said, you shouldn't expect projects to be delivered as per our own plans, because all over the world we don't know what's happening. A lot of countries are focusing more on what they give to their own people and their companies. So it's quite critical that is considered. So licenses are going to be very, very important going forward. As Exxaro, as you saw with what we have done in the past, in 2013, we continue looking at our portfolio. We have to optimize our portfolio. We have to look at the size of our operations. We have to look at what it is that we can do to grow the business so that as we win, you also win. I think it's important that we do that. So we are continuing looking for new opportunities and pushing projects. And as Rem has pointed out, we're not going to be deploying capital into areas that have not been carefully considered and are not focused. And I think it's important to do that. And so that's why Thabametsi is very important to us, because it takes the company forward, and so is Belfast. I think Eskom, and everyone is a bit concerned about Eskom as a customer. But I mean, you know, of all the customers that I've ever dealt with and all of them that we've ever had, I want to assure you that whatever happens, Eskom still remains a very important customer in our lives. And it all depends on how we deal with one another. We deal with issues. They may have some challenges now and again, but they are a solid customer. And at the end of the day, we will deliver the tonnages to Medupi, because I mean, I cannot see this country going forward without that project going forward. So it's important that we believe that it is going to happen anyhow. So as Exxaro, we have a very good relationship with them. We engage with them, as Rem pointed out, and we build a very good partnership with them. And so with TFR. And TFR has been very remarkable. And Olisi and the team, the work that they have done is quite remarkable on the Waterberg front. So we continue nursing and nurturing those kinds of relationships. The coal business, as you saw, we are now focusing on growing our export business so that leg of the business continues to be strong. And these initiatives that we are taking are quite critical. And also the metallurgical business, we're not leaving it behind because it's important. On Mayoko, I am not going to say much. We promise to you that we will delay the project because we wanted to get licenses. That we did. We promised you that the first quarter we believe that we will sign all the agreements. We're in the process of finalizing all the agreements, and that is happening. The delay, though, has impacted us in the sense that we are not in a position to work out the detail because we've got to sift through the document so that we give you a number that you can work on. So a little patience really is what I'm going to implore you and ask you for, so that we don't start announcing things, because the board needs to look at that one carefully and tell us where to jump off or and do certain things, because our board is very prone to those kinds of things and telling us to walk away when we bring in projects. Synergy is a big focus in our lives, because these partners of ours are developing now these new projects, the Amakhala, Emoyeni, and Tsitsikama. And it's quite exciting what's going to happen in the country insofar as electricity supplies are concerned. On Tronox, the next 18 months, or 15 months now, are very critical in our lives. We're spending a lot of time and dealing with a lot of analysts trying to understand and review our position before we make a major decision on that one. So we still have time. Take it easy. I saw some comments in the wires and in the media saying that we're not even sure what to do with Tronox. We know exactly what we want to do, but when we make that step, you will see it at the time. We are reviewing and spending more time looking at the numbers on that front. And of course, the last bit that I want to talk about is costs. We have a structure and a program that is now working in the organization. Over a period of time, we will deal with all the costs that are there. But there are costs that you're not going to take, because you still have a CEO in the organization, and you still have to pay for him. And unfortunately, that's a cost. So if you want us to remove all the costs, it means we'll get rid of them. You'll get rid of me. You'll get rid of probably even the board, because they cost us a lot of money. So we've got to get rid of them. The sign is there. So, ladies and gentlemen, thank you very much for your attention, and to all our people here and across the country and in other countries. Thank you very much for good result. And I think this is quite pleasing to see that even during difficult times, people work hard so that our shareholders and all interested people would benefit out of that. And I shall hand over to Mzila to now close the chapter. And as I normally say, Verm and myself have done what we could. So it is the rest of the management team who are sitting here that now must do the work. Otherwise, they would be working at their desks if they wanted to be doing some work. So now they have to do some work. Thank you very much.
Thank you. Is this on? Thank you. I think that dovetails into the Q&A session. And we'll start with questions in the room, and then we'll move to the digital. And there'll be a couple of roving mics. Have we got the roving mics? Okay, and there are a couple of hands up. I'll start with Tim, and then Lee. And there's another question at the back. So, Zora, there's a question there.
Thank you. It's Tim Clark from Standard Bank. I've got 3 questions, please. The first one is just on the Waterberg. I wonder if you could just talk about what has actually changed. They're sort of sending two more trains a week on a run rate basis to you from 2. So it's a big change. But what actually has changed? What has happened that's happened? The second one's on corporate costs. It's a very commendable outcome to have cut so many costs out. I wonder if you could talk about run rate for us, because you've given us a year's number. Is that post the restructuring? Was that all in 2012? Should we think of the same sort of number going forward, or is it the run rate? Because it looks like in the second half the run rate's higher. And then, Vim, sorry, the last one's probably for you again. On balance sheet, quite a lot of the mining companies now are giving us quite strong indications of the level of return that they require from a project. BHP said north of 20% IRR. Certainly Glencore's talking a similar type of number of 25%. I wonder if you could give us an idea of what kind of hurdle rates you've got and how you think of the balance sheet, because, again, they've all given us quite a strong indication of where they see a maximum level for the balance sheet. And if you look at that presentation you guys have given us, there's a lot of growth there. So there's a lot of potential capex.
Okay. What do you want to do? Just accumulate a couple of questions or just answer those three, I think?
Yeah.
Okay, on the first one, I think, Mxolisi, you could assist us with that.
Thank you very much for that question, Tim. I think we are beginning to see the culmination of a process that we engaged in starting from January 2011 between ourselves and also Transnet from a strategic project level, from a group level, and more specifically TFR, insofar as coming up with a strategy to unlocking the northwest corridor right up into Grootegeluk. And that actually translated to one of the 17 SIP projects under the Presidential Infrastructure Coordinating Committee, which is called SIP1, which talks to unlocking that corridor, also talking to unlocking the water needs of that area. So over that period, we have been working very hard between ourselves, the TFR project team, and also with other critical stakeholders in terms of the other groupings that are there, the Sokokos, ResGens, insofar, and also through the Chamber of Mines, in saying what sort of structure can we put in place that talks to this type of acceleration of that development up there. So physically, what has happened on the ground? We have managed through the concerted project from TFR, where over a period of the next coming 3 to 4 years, where their intention is to be able to get up to 28 million tons on that line, that as from this current period, we have been able to increase that capacity from 4 million tons to right now to 6.5, by increasing one of the by additional loop that was created. The next loop that's going to be put in place in the course of this year will take that capacity up to about 10 million tons. And that loop will also allow 200 wagon trains to actually be brought up. And therefore, with the additional projects that we're doing right from Emelo to the Waterberg, to Richards Bay, we will be able now to take trains right from Richards Bay, 200 wagon trains, bypassing Emelo, which was a critical point where trains were broken up. We should be able to take them right up into the Waterberg as 200 wagon sets. So that's the next phase of this development, which we're looking to be seeing in the next coming 12 to 18 months. So a lot of work is being done on the ground, which they don't shout a lot about. We also don't shout a lot about. But I think we always say, the real test is when the coal actually moves. So I think in summary, that's really what has happened.
Okay, thanks. And the next question was on the
Tim,
corporate
on the corporate, the 157 million, I think you can assume that it's been taken out permanently out of our cost structure. We like to do stuff under the radar and don't announce to the world exactly where we are saving our costs going forward. And I would rather not at this stage give you indication if we believe we can increase that. I think any company needs to continuously decrease their cost, and that will be the focus, as Sipho said, going forward. On the project IRRs, you will see on slide 4, we stated we want to make a 1.5 times our WACC on returns. That implies a 20-odd% return. So I think the 20-odd% return is a very logical assumption to make that those are the type of returns that we look whenever we look at a new project. Needless to say, there will be different returns for different projects regarding the risk factor that goes with a specific project. On debt, you may recall in the past that we had shared with you that our board gave us a limit of 40% debt to equity. We are on 10%. With the existing capital to be spent this year, we will remain around 10%, so we believe there's a lot of firepower still. If we, however, make a significant investment, and the two areas that we indicated to you in the past would be at Tronox and, of course, at Miramba, that will imply that we will have to think differently. For the existing projects that we have currently in the pipeline, we will fund that with our existing balance sheet within the rules that our board allowed us on 40%.
Hi, Lee Brigman, RMB Morgan Stanley. Just three questions, or two, starting with GMEP and then just an M&A question. The volumes to Medupi for this year, you've guided you'll start selling them coal. What sort of volumes do you expect currently? I know things can change. To be sold this year, and will the income and costs of those volumes also be capitalized, or will we see that actually come through the income statement? And then the shortfall payment, I just want to understand, is that for the volumes you would have sold that you're not selling, so it excludes the volumes I've just talked about? Or are these volumes, if you show them in the income statement, going to be over and above the shortfall payment? And then finally, are you also interested in total coal? I know everyone's being asked this question, but I'd be interested to hear your response.
On the GMEP side, 6 million tonnes would have been delivered under the old agreement. As a result of the current delay, it will definitely not be 6 million tonnes this year. We are in the process of negotiations of whether it will be 5 million tonnes or 4 million tonnes. Let's just, by way of an example, talk to a 5 million tonne option. Therefore, we will always receive the 1.5 billion. That was a settlement last year as a result of the coal at that stage that they lost. So that will continue, and it's got nothing to do with the 6 million tonnes. On the 6 million tonne scenario, let's just use an example of, let's say they do take 5 million tonnes. We will deliver 5 million tonnes, and the million tonnes will be under a take or pay agreement. So that will be on top. On the capitalization rules, we will capitalize all the costs and therefore the income associated with all the tonnes that we plan to deliver until 30th of June. So all the tonnes that we will physically deliver to them after the 1st of July, it will then go to the income statement, and the cost associated with that will go to the income statement. As I said in the presentation, that's our current assumption on 30 June. It may change over the next few weeks.
On whether we are interested in total, as I pointed out, I think it is important for everyone to understand that we need to grow the business. And as we grow the business, we look at various opportunities that are there in the market. Now, if total is an opportunity, we'll look at that. But it's not total, but it's many other projects that are there. Because the key thing is bringing businesses that will add value into our own business. So that process of evaluating anything, whether it's an opportunity, I think that's very, very important. I think that's a fair answer, isn't it?
Very precise.
So there's a question there. So we need a mic there. Oh, I've got one, sorry.
Hi, it's Johan Pretorius here from Renaissance Capital. Just two questions from my side, please. First of all, can you give us a bit of guidance on what we can expect from Synergy's profitability, including when you think it'll start breaking even, and then the total potential going forward? And the second question is just on Thaba Metsi. Maybe if you can give us your latest outlook and timelines for that project. Thank you.
Well, I know Synergy, and then you can take Thaba. You can take Thaba. Okay, I'll take Synergy. No. Taba's one each. Johan, on synergy, we said in the past that we expect somewhere the losses to be around 75 to 100 million rand for a 5-year period. As we go through the process, that is our share, as we go through the process. So that's the money that as shareholders we put into this business over the next 5 years. I think it's too early to share with you guys the returns after that, or what will happen to on their share to Exxaro. They have currently 2 projects. You may recall they have only spent of the money that we made available to them, our share 800 million rand. We made 1.5 billion as a board available on the synergy leg of our business. And there's a lot that Tommy and the team is busy with, still spending, still new projects that they look at. Once we understand what's going to happen over the next 3 years, we will be able to give you the guidance. But for now, 2 years gone, 3 years left, assume around 100 million loss for the next 3 years.
On Thabametsi, may I just also say that I'm pleased that Ernst is back. I mean, he spent the last 4 months in Congo because we wouldn't allow him to come back until we got the agreement signed. So he is here, and he's going to tell us a little bit about Thabametsi because it's his project, making sure that that project works. But don't go into details, sir. Just...
Thanks a lot.
It works, don't worry.
Is it working? Okay. Good to be here. Good to be back. Just on synergy, I mean, COD for the 2 projects that we're busy building and starting construction this year is in 2016. So from 2016 at least, the 2 wind projects, which will generate about 220 megawatts, will get into production, and there will be some positive sort of revenue and earnings coming out of synergy. Back to Thabametsi. Thabametsi, of course, as Sipho and Wim has indicated, is important for us for our whole Waterberg strategy because it could develop into a similar complex as the current Grootegeluk-Medupi expansion project, which currently you sit in Grootegeluk with a 35 million ton per annum capacity mine, which is massive with 8 different products and all of that. But on Thabametsi specifically, we will develop Thabametsi in phases. The first phase will be to produce about 3.8 million ton to 4 million ton per annum of power station coal to a CFB, circulating fluidized bed combustion power station, which will produce 600 megawatt into the grid. And as you know, we've signed the agreement with GDF Suez. What needs to happen now, we of course have finished the studies on a PFS level for the mine and how the mine will look, etc. And GDF Suez, together with us, are interacting with Eskom to get access to the grid and to wheel the power or to enter into a PPA with Eskom on that. And as we can experience this morning, we do need a little bit more power on the grid, And I think what if we look forward in the country, we do see that there will be an increased activities of IPP. So I think this project is ideally positioned to take advantage of that. And if we can do that, then we can develop other products from the mine. The mine has got about 5 billion tons of reserves or resources, so it's massive, and we need to think how we then ratchet up from that. Thank you.
Thank you very much, Charles. Were there any other questions? Maybe if there aren't on the floor, are there any questions from those dialing in? Or...
Yes, there is. We have a question from Renee Claver of Deutsche Bank. Please go ahead.
Morning, gentlemen, and congratulations on the coal performance and the transparency on Mayoko in terms of how you're looking to move forward there. I was just wondering, in terms of the shortfall payments, could you provide a clarification on how much has been received to date, and what sort of the sort of increase from the sort of 1.3 guidance to the 1.6, does that reflect the slippage from November to February? And therefore, if we're moving from February to April, should we expect a similar adjustment again? And just in terms of the reference to the broadening of the debt facilities, are you also looking to deepen the available credit, or is it just a broadening of the sources? And then finally, if I may, just in terms of synergy and on the coal side, how much time are you spending at actually looking at opportunities to grow the business, be it with Total or opportunities in Mozambique, or in the case of synergy, opportunities across Africa as a whole? versus your own growth opportunities. We're just trying to get a sense for how much effort is being put into those potential acquisitions. Thank you.
Shall I try the shortfall? Renee, when I use the number 1.5, I use it loosely. It is actually 1.6. So let me refer to the number. It's 1.6 billion that was received last year. And the previous year, you recall, it was 325 million. 32? So 352 million. So it is basically 2 billion that we have received over the last 2 years on the shortfall payment. The 1.6 billion or the 1.5 billion guidance that we give this year is not dependent on when we will start to deliver the 6 million ton skull to them. So that is a guaranteed amount that will be received. I can also share with you, because I think there are some discomfort that Eskom do not pay us. That is not true. Eskom pay us every month on the invoice that we send them. So there's absolutely no truth behind the fact that we haven't been paid the 1.5 billion up to now. On the bond, Renee, we are looking at all options, whether it's deepening or more broadening of our facilities, and we will share that detail with you very soon.
On the growth side, as I said, we have a gentleman here, Danny Mouton, who's really been scanning the entire world insofar as growth opportunities. He looks at Australia, he looks at Mozambique, he looks at South Africa, he looks at Zimbabwe, he looks at all sorts of countries where opportunities become available to us. So we will look at them. We will look at them very carefully. But one of the things, the opportunities are there. Anytime you will find an opportunity, but there are key things that you've got to deal with, and that is the availability of the capacity to do that. In other words, can we do that as the organization? The second thing is the availability of resource, human capital, to execute and to deal with those kinds of things. That's very, very important in our lives. We have amongst our directors now, Con, who used to lecture us on one thing, and we would say, guys, let me tell you, don't grow yourselves to death, because you can easily grow yourself to death if you're going to run after everything. So we carefully consider everything that is there. So we are looking at opportunities even in Mozambique, if they would present themselves. But we're not going to do that at the expense of the current pipeline that we've got, which we think is very good and robust.
Any other questions?
Thank you.
Anything from Twitter?
What's that?
Twitter. Sorry, Twitter.
Too old for it. Let it go.
Jeez.
Just let it go.
Can I come back to the floor? Any questions here? Any other questions?
No, sir.
Okay. If there are no other questions, I guess that brings us to the end of our session, and we've survived the power cuts. That's great. Maybe just to say, first and foremost, thank you very much, ladies and gentlemen, for your presence and your support, particularly from our investors and shareholders and business partners. And secondly, I have to say and give compliments to the venue. I think for me, certainly, it's what I can only call an exhilarating atmosphere that it provides. I think as soon as you open the curtains, hopefully the sun is shining. It just brings back the summer that we almost all forgotten about in South Africa. And then I have to thank the people who really made this happen, the IR team, and it certainly has been teamwork. And reflecting on how we got here, firstly, in terms of just organizing around the event, the organization for the day, that takes a lot of work, and it starts quite early. And I'd like to say thank you to all the ladies and gentlemen behind it. But it's also fair to say that, it's actually an overall organizational effort to get to where we are, because it's really around, I think, firstly, the business performance. That's what we're really here for. So as was said before, and if I can echo the sentiments from Verma and Sipho, that thank you very much to the management team for the effort that you've placed, and may you continue to do so. And it's also important that that performance is then, I think, appropriately structured, and that the key messages get across to investors so that there's a common understanding of how the business is performing. That's how we get the investment, and that's how we get the rating on the share price, of course. And then lastly, the face and presentation here today from SIPA and VIM. Thank you very much. I'd like now to extend an invitation to please join us for something to eat and drink. We will have a media session. Hilton, what time do you start? 11:30 in the boardroom. So thank you very much and have a good day.